Hey, so Bill Soriano from Pittsburgh, and I wanted to make a quick video here showing you my trade for today that I have in the Facebook group right here. Oh, link there. So right here you see today I posted about 9 hours ago that finally caught a 50 pip move. We'll probably drop another 50, but you can't get greedy. This was in GBP NZD. I took this trade during the Asian session. So I have a new signature trade that I'm going to be sharing with the people in my iMarkets Live group that have joined me in iMarkets Live. There's only about 5 or 6 of you right now, but I'm hoping to get that number up quite a bit to help a lot more people be successful with their forex trading. And again, not only you're going to get the stuff that I give you, but there's also a ton of other stuff, a ton of other groups, and just a ton of stuff that you get as well. That far surpasses what I give to you with iMarkets Live. But just to show you how this trade works here, I call this trade the Tokyo Cross. So my mentor, the mentor that I follow in forex trading, taught that you probably shouldn't trade during the Asian session because of the fact that it's let me just check to make sure this is working here. Yes, because it usually doesn't move that much in a lot of the pairs. But what I find is the obviously at the start of the day here, this was 5 p.m. Eastern time right here. So this is what I call the Asian box here, and this is a template that I got when I purchased the training, and this is available also to people that are in my iMarkets Live group. But this is the Asian range box here, and it goes from 5 p.m. to I think it's 2 in the morning. Yes, 2 in the morning. It is 1 in the morning. I'm sorry, 1 a.m. Eastern Standard Time. Now we know that the Tokyo session doesn't open until 8:30 p.m. Eastern Standard Time, which is this candle right here. But we want to start looking at it at the start of the day at 5 p.m. So if you're looking at the AUD pairs, during this, you want to use the AUD pairs, the JPY pairs, and the NZD pairs for this particular signature trade of mine, which I call the Tokyo Cross. So you want to take the trade during the Asian session. And what you're going to look for is the first thing you need to know is you need to know what is the market maker trend. Okay. Is it up, is it down, or is it sideways? And when I say the market maker trend, that's sometimes it's not the technical trend. Now, sometimes the market maker trend and the technical trend will be the same, but other times it will be different. So I use two charts. I use the 15-minute charts to take my trades, and I use the 1-hour charts to determine the trend. I like to use the 1-hour charts for the trend. So you see here in GBP NZD, you can very easily see that the trend is down. Okay, the market maker trend is down. Also, the technical trend is down. To determine the technical trend, a lot of people look at the water, which is a 50-day, and it's below the main A's, which is the 200-day right here. And you can see that it's been like this for quite some time. So we like to put the trend into levels. We say level 1, level 2, level 3. Level 1 is usually the time when the market maker trend is different from the technical trend. Okay, and then what happens is at some point you get the cross here where the 50-day crosses the 200-day, and then the trend is the same. Now, if we could take this back a little bit further, we can see a time right here on this on the first day here. Let me just move this here where you can see that this day here, this move down here, which would be a level 1 move, the technical trend may be actually down still at that point. Or I'm sorry, maybe up still at that point. So sometimes it's different. Sometimes it's different. And then when it's in level 2, it's the same. And then when it gets to level 3, that's when the market starts moving sideways. And it'll stay in a range, and that's what we call reset. And then after that reset, it will decide to either make a level 1 move down or a level 1 move up, and that'll be the new market maker trend. Now, when it's down, when the trend is down like this, you only want to look for shorting opportunities. You don't want to go against the trend. It's best, it's safe to stay with the market maker trend. So in this scenario, you only want to look for shorting opportunities. If this was up, you'd look for long opportunities. And if it was in level 3 chop or moving sideways, like we say, then you can go either way. But you have to be cognizant of the top and the bottom of the range, and you have to also adjust your profit targets as well because of that. But I like to stay away from the level 3. I like to trade when I see a clear level 1, level 2 move in a particular direction, and I like to stay with that trend. So this tells me that if I'm going to trade GBP NZD, I'm going to go short. I'm not going to try to look for any long opportunities. So what happens here during the Asian range, what normally happens is the market maker will try to make a low and a high, and then he'll decide to do what to do from there. So you see here how it comes down and you get a pin to the bottom, and that's actually the low of the Asian range. Now I don't want to concern myself with the moves down, the false moves down. I want to concern myself with false moves up so that I can short them. So then what he does is he makes a move up here, and you see right here he makes the high of the day in the Asian range, and then he also throws somewhat of a railroad track up here as well. So then we call this the Tokyo cross. So what we're going to do is we have a yellow line here, trend line, which is the 5-day exponential moving average, and the red line is the 13-day. And we're going to call that the mustard and the ketchup. So we're looking now, we've identified the top of the Asian range here, and it's very important, by the way, you see down here how it says that this range is 75 pips. So before you take a trade, this range has to be at least 50 pips. The more, the better, but also if it goes too far, then you have to worry about, is the trend changing or not? So, but if you're in this 50 to 75 pip range, this is very good, okay? And so this is a 75 pip range here in this box. We've identified what we think is the top of the Tokyo channel here, so to speak. And so from there, we just look for a cross. Now, the particular template that we use will give us an arrow when we do get a cross, but you have to wait for the candle to close, and sometimes before the candle closes, the cross will uncross, so to speak. So you got to wait for the candle to close. Now, right here, I got a cross, okay? And you want to get that cross. It's better if the cross occurs during the Tokyo, inside of this Tokyo box. That's why we call it the Tokyo cross, right? So we get the cross right here on this candle, which means we would take the trade then at the open of this candle here. So this candle opens right here, and you see I was trying to get 50 pips, and it moves right down to here overnight, and I was able to get my 50 pips and get out right here. Now also notice how it pulls back. It has to pull back at some point, right? And then it goes lower. Remember how I said and actually it drops 140 pips from the point of the Tokyo cross. Now remember I said here in the group that I got my 50 pips. It'll probably drop another 50, but you can't get greedy, right? You want to get your 50 pips and get out. Okay? You can't get greedy. But it does drop another, 100 pips after I get out. Now, right over here, this has an average range of about 136 pips. You can see that right up here. It's about 40. Let's just say 45. Let's just say 50 pips for certain, so that you know if you divide that by 3, that kind of gives you an idea of when you might get a pullback. Okay? And so if you're the type of trader that wants to stay in longer, you understand that this pullback here is just part of the process of this move down, right? And then it goes down further to here. Now the interesting thing is I got my 50 pips, and that's the Tokyo cross right there. Okay, so I like to see at the top, I like to see an M formation. You see this M here? You can also see the M in the mustard. And down here in what's called the TDI, you also see an M in the TDI. So I like to wait for this M to form, right? And you can see here it takes about 2 hours, 2.5 hours to form, and then we get the cross. We get the ketchup mustard cross, which we're calling this trade the Tokyo cross. And it goes right down, and you just see this over and over again, guys. If you look the day before, right here, see the move up during the Asian session. The box was 97 pips. Here's the cross right here, right? You get in right here, you have a 179 pip drop, okay? You can do this as long as this currency is in is the market maker trend is down, okay? See how you get the M here, and then you get the cross. You can go back and you can see these over and over again. These crosses, ketchup mustard cross during the Asian session. But again, you want to make sure that the box is at least 50 to 75 pips. You don't want to get in too soon, because if you think this is going to be the top right here, you're going to get stopped out, right? Right? So 50 pips in this box is right about here. So you want to make sure you're getting the top. You don't want to get fooled and get in too early, and then you end up getting stopped out. If you do, you just get right back in and get your money back. So that's the Tokyo cross. We also see down here what it does is you're looking for 3 intraday pushes. So you see here on this move down, you can see 1, 2, you can clearly see 3 intraday pushes, and then actually even a 4th push down, and that's actually the low of the day. So we found the high of the day, right? We're gonna assume this is gonna be the low of the day, and now what we could do is we can wait for another ketchup mustard cross up, and during the New York session or right before it, we can take a counter trend trade back to the water. You'll see this over and over again. Okay, see how you get the cross right here, right? That tells you to get in on this candle right here, and you get a 30 pip move back to the water. It actually ends up going 45 pips up to this pin here, but you want to just take it back to the water, the 50-day moving average. Take your profit and get out. Okay, so this is Bill Soriano from Pittsburgh, and I wanted to show you my signature trade, which was right here, called the Tokyo Cross.